Marc Ostwald joins us now from ADM Investor Services. Marc, good morning to you. I know you've been at your desk for much of the night, certainly been monitoring these markets. What do you make of what's happening?
Well, I think a lot of the worst fears of people have been realised in terms of how sharp a reaction to a leave vote would be. It became fairly clear that the gamble on Remain, which had been pretty clear over the last couple of days, was totally misplaced. And once again, obviously, polls have been giving us, well, actually, they did give us the right steer, because all the way along they've been indicating that it's very difficult to gauge what the final outcome was going to be. But it leaves us in this situation where we've obviously got a massive risk off, having had a much better risk sentiment in the first 3-4 days of this week. And the really big question is how much damage has there actually been done? Because when one looks at the extent of some of these moves, it does seem that the new regulatory architecture that we have for the financial system perhaps exacerbates exponential moves, at least short-term ones, rather than dissipating some of the risk.
We were talking before we went to air on this, and you were saying in absolute terms, yes, we're not even at the point we were at on the 10th, 11th of February, where we were down at 5,500, on from the concerns about the Chinese economy. Just put this drop today into some sort of context.
Well, I mean, it still actually leaves us in most of these markets, whether you look at the EUROSTOXX, whether you look at the FTSE or the US equity markets, in a sideways churn. But the problem is, what we've got now is much greater volatility. And that volatility is more than likely to stay, because there are now so many uncertainties associated there, and all the other concerns that we have not gone away either. In fact, some of them have probably got a lot worse, like all the concerns about the health of the banking sector in the Eurozone, which were there regardless of the way this vote turned out, but will certainly have been exacerbated by it. The risk eminently is that we retest the lows that we saw back in February, simply because of the concerns about people's doubts about the US economy. The doubts about China remain extant. They haven't been, they may have drifted somewhat into the background, but that's only because the referendum was the most immediate proximal risk for financial markets, and therefore markets focused on that.
What do you make of what's happening with sterling at the moment? We started the day up over 150, and the low point just a couple of hours ago, 132.45. What do you make of sterling? It's a small recovery underway here.
Well, in a market which where people, if you see a sharp drop in asset prices and a sharp drop in currencies, and people are desperately hunting around for yield and income and opportunities, the distressed nature of UK equity markets and sterling will probably attract quite a few people, as well as encouraging quite a few others people to look at the market and say, 18 cents down against the dollar in one move. I think that's rather overdone. So I think at the moment it's going to be a question of what sort of range are we going to stabilise in, and that's going to take a little bit of time to establish.
And the Bank of England taking all necessary steps, according to a headline just passed. What are those steps?
Well, I think it's basically to ensure that there is sufficient liquidity in all the in the UK banking sector, which is obviously colossal. And the last thing that anyone needs is any sense that there might be a bank which is in trouble as a result of this, and they will do their utmost, without a shadow of a doubt, to ensure that doesn't happen. Nevertheless, rumours will inevitably emerge about one or other, the scale of the losses on some books.
Yeah. What about the euro? How is the Eurozone going to take this? We've already heard commentary. I think that Geert Wilders has already called, or wanting to call, for a referendum in the Netherlands. Clearly, this has a big threat for the rest of the EU, and of course also the Eurozone. We were talking, I think, this time last year, potentially about parity for euro-dollar. We never got there, but it looks like if we continue this trajectory, we'll be there in no short time.
Well, yes, but this is, that would be a slightly different concern. That was, I think this time last year, everyone was focused on the divergence in interest rates between the Eurozone and, above all, the US. I think in this situation, where the concern is that what has happened in the UK leads to even more political instability in the Eurozone and broadly in the EU, and threatens to unravel both the Eurozone and the EU. And therefore, on that basis, the Euro remains vulnerable until there is some sign that someone's taking up some leadership. And unfortunately, that's really, given what we've seen over the past 5 to 10 years, above all in the context of the Eurozone crisis, there is good reason to have a lot of doubt that there is someone there. I think above all Frau Merkel could be brutally exposed as lacking the necessary crisis leadership and statesman-like behaviour.
Mark, one final question. You've got a client book. What are you going to tell clients today?
I think the best advice at the moment is that if anyone had some specific positions which have benefited from what we've had, I would book some profits and withdraw to the sidelines, because right now what we've got is a process of trying to establish what happens next, and I think trying to second guess that, particularly the politics of it, is probably something best left alone for the time being.